Thank you so much. Thank you so much, Dr. Supernadita. Hello, everyone. A very warm welcome to all of you, and a very good morning on behalf of me, the panelists, and Grameen Foundation. We are here today to discuss financial frauds in the BC industry. Uh, this industry has seen a lot of changes over the last decade, and the regulator has been, at the forefront, hand in glove with the industry, taking cognizance of what's happening on the field, and bringing in regulations because of which a lot of changes need to happen. These are often derived, because of the fraud that takes place on the field. Today, we take this opportunity to discuss, the financial frauds happening in this space and, what are the possible ways to curb them. With this, I would like to introduce our panelists. We have Anuj Saraswat, Director and Business Head, Financial Services and Inclusion, Hitachi Payments. Welcome, Anuj. We
Thank
have
you. Thank you, Vaibhav.
we have Ashish Shah, Head of Operations and Transaction Monitoring, NSDL Payments Bank. Welcome, Ashish.
Thanks, Vaibhav, and good morning to all.
We have Dr. Jasmine Gupta, founder, Meet Money. Welcome, Jasmine.
Thanks, Vaibhav. Good morning, all of you.
And we have Savitri Bobde, co-founder and COO, Belong. Welcome, Savitri.
Thanks, Vaibhav. Hello, everyone. Looking forward to this.
Great, great. So I'm going to request all the speakers to briefly introduce themselves in, say, around 30 seconds. We can start with Savitri, Jasmine, Ashish, and then go to Anuj.
Sure. So, hi everyone. I'm Savitri. I have recently started a company called Belong. We want to disrupt NRI financial services. We want to make it much more seamless for NRIs to access personal finance in India, be it savings, spends, or investments. Before that, I was the Chief Customer Experience Officer at Neo Solutions, which is a zero forex markup global card. And before that, I was again a co-founder at a mutual fund investment platform called Goldwise, which was acquired by Neo. That's how I was in Neo. So that's been my decade-long journey in finance in India.
Thank you, Savitri.
Somewhere along that line, I've met Vaibhav, and that's how I know him.
Thank you. Thank you so much for that, Savitri. Jasmine?
Hi, everyone. I am a banker turned fintech founder, having 20 years of experience into banking. HDFC Bank, Kotak Mahindra Bank, Equitas Bank, where I was heading digital banking, and I happened to launch NeoX, which was in partnership with Equitas Bank and Frio. Also co-founded Lakshmi, which is India's first financial platform for women, and now founded Meet Money, which stands for Money, Education and Inclusion Technologies. Thank you, and look forward to having a very engaging and interesting conversation with all the panelists. Thank you so much.
Thank you, Jasmine. Ashish?
Hi, I'm Ashish Shah, and I head the operations and the transaction monitoring at NSDL Payments Bank. I am a banker by profession with nearly around 2.5 decades worth of experience, out of which the last 12 to 13 years I've very specifically worked on risk mitigation and transaction monitoring in the retail liability space. Have been working with multiple banks, Kotak Mahindra Bank, ICICI Bank. Had a startup of my own, which I have now closed down, and then I have now joined NSDL Payments Bank just 6 months back. Yeah, so it'll be my pleasure to have a discussion with all the panelists on this very pertinent subject, which is plaguing our industry as of now.
Thank you, Ashish. Anuj?
Hi, good morning to all, and thank you for having me here. I'm Anuj Saraswat, and I am currently, working as a director and head of, financial inclusion business at Hitachi Payments. Prior to that, I have had like some 22 plus years of experience in banking and fintech space. Major stints with, Citibank, ICICI in the initial days. most recently, I was involved and I was working as the chief product officer at India Post Payment Bank. So that was in its formative period, in fact, when we were setting up the bank. And prior to that, I was with RBL Bank as well, heading the product strategy and innovation function of the BAS unit, which was the partner fintech collaboration unit. Uh, so that's it from my side. In fact, that's my brief background, and happy to be here and looking forward to the interaction with the panel over here. Thank you so much.
Thank you, Anuj. Thanks all the panelists for that quick introduction. Anuj, let us start with you. You have been a stalwart in this industry, and there have been a lot of frauds that we have foreseen happening in the industry. So what do you think are the primary factors contributing to the high incidence of fraud among VCs, particularly the high performing agents?
See, I would not go directly into the frauds part of it in terms of what are the types of frauds and the pieces, but definitely the way the entire ecosystem and the industry is structured. In the entire VC industry, there is no entry barrier per se. Any person with a small network can become a corporate VC, associate and affiliate with a bank, and get into financial inclusion space. Now that is the problem statement to me, because while the government and Reserve Bank has been working big time on financial inclusion initiatives and taking the financial services to the masses, the problem is that in the entire expansion, if you look at it, the people who get associated with the banks, the due diligence process, the selection criteria, that is something which I see that there's a weak link over there. And many banks which are engaged in the VC business, in fact, the due diligence process at their end is something which is a big area of concern, specifically with API banking and proliferation of API services to various players in the industry. The problem is that there is a big cartel, big industry within the VC industry itself, which is running and looking forward to work on fraudulent cases, money laundering, all those things. So I feel that one of the biggest and the most important reason for a lot of frauds in the industry is not so clean ecosystem. There are quite a few bad actors which are there in the entire setup, which leads to a lot of consumer frauds when it comes to solutions like AEPS, when it comes to money laundering. Domestic money transfer is very widely abused. So those are the major reasons because of which there are a lot of frauds, which never used to be the case if you ask about when the entire VC industry started off, and it was only PSU banks who were deploying VCs on a very selective basis, restricted to a very limited number of CSV points, and at the same time a very stringent and very compliant due diligence process.
Very well put, Tanuj, and that's a very interesting perspective that bad actors in the ecosystem often bring a bad name to the entire ecosystem. We have a banker amongst us, Ashish from NSDL Payments Bank. Ashish, what are your thoughts on this from a banker's perspective?
So from a banker's perspective, if you ask me, today, so let me take an example of NSDL PB, where we are a complete sort of digital bank without having any specific branches or any very minimal CSP points across the country, and where our dependency is on our network that we tie up with the various BCs, corporate BCs. Now, if where we define policies for our corporate BCs and for onboarding the last mile agents, like Anuj said, yes, there is a big lacuna over there. At the same time, what we see is that because of not having a centralized information sharing between various players or various banks in the system, we are not able to identify bad actors and share that information with others. So if a agent who has already been tagged as a bad actor in with a specific bank, the same agent can again be onboarded by the other bank. So there is no centralized information sharing which is done. As a result, the same person, even though he's tagged as a bad actor, is still onboarded with some other bank, and he still continues with the same fraudulent activities. Though now I4C has stepped in and has started doing something, at least on the AEPS part, where they have started sharing details of such known bad actors with all banks. And they've asked us to increase our due diligence so that we can curb this menace.
Interesting, Ashish. And maybe, the formation of probably an SRO, not a subject I want to touch upon in this panel discussion, but maybe a formation of an SRO will probably, help to, form a central registry or something. Let's hope that it does that.
Yeah,
Ashish,
let's hope.
staying with you, I move on to my second question. What specific type of frauds are most prevalent in the business correspondent model, and what are the common characteristics?
So the most common frauds are your round tripping, wherein the same uh, agent customer partnership or duo is seen doing multiple transactions at the same time, and trying to be within the limits which have been specified for the products. So be it APS, be it DMT. So they play well within those. And at the same time, they are aware through uh, the limits are specified across all banks, and they are the same. So they are very well aware of what is happening. And at the same time, apart from round tripping, to earn commissions, the other aspect is to defraud gullible customers. So because of financial inclusion, we cater to the masses, which is the tier 4, tier 5, and tier 6 cities of our country. And that is where the understanding of how the banking system works and how the actual transaction happens is very limited. And education will play a major part in this going forward, where we educate the customers themselves. So what happens is that round tripping being one, the second part is being you spoof or you fish gullible customers into sharing their details, and then you do the fraudulent transactions. So these are the major common ones. One very particular pattern that we have observed at multiple banks is, yeah, so there is a few balance inquiries done before the transaction happens, the fraudulent transaction. So that is one characteristic which obviously stands out. Why would a person want to do multiple balance inquiries in a very short period of time before you do your fraudulent transaction? So such small patterns, if we as an industry, we as a bank, we understand these patterns, then yes, we may be able to do something about the fraudulent patterns.
A very interesting thing you said, Ashish, and I will stick with it for maybe 10-20 seconds, because recently, a lot of these PSP UPI apps, they introduced a feature where you could actually check balance of a particular account from your UPI app before you make a payment. Once you scan the QR code, you can click on check balance, understand what is the balance, and then make the payment. To the contrary, in the BC industry, this works. This trend seems to be, this feature seems to be working reverse way, more helping the fraudsters than helping the consumers to actually just find their balance and then go ahead and do that. Anuj, I'm going to come to you with this same question. Your thoughts on the points that Ashish made
See
about
what
the prevalent frauds in BC industry.
in fact, what Ashish pointed out, definitely it is something around tripping and splitting of transactions and all. I would, to an extent, not term them as frauds per se, because these are malpractices more to do with with the greed to make more money out of commission income, agents tend to do round tripping transactions, moving money into their account, bringing it back, withdrawing again, all those things. At RBL Bank, we used to face this as a lot of uh, billings for the PSU banks, specifically who are the large issuers, used to be very high, and we used to sit in a EPS steering committee and we used to fight over it. But if you ask me in terms of frauds, the other types of frauds and malpractices which run in the industry, one is definitely related to the biometric cloning, which is a big risk, in fact, because your entire biometrics are stolen and people end up making those silicon thumbprints to withdraw money from the transactions. Specifically coming on to money transfer services, in fact, people at large don't understand uh, the complications, the risk associated with renting out their mobile numbers and accounts. But in money transfer business, there's huge amount of money laundering which happens, wherein customers are not aware that their mobile number has been taken to register as a sender or a beneficiary in the ecosystem, and that cash is something which gets circulated, and integration, layering, all those things which we have learned on AML site, is very well orchestrated over there. Other than that, the bigger issue which is there in the industry is that when you talk about financial inclusion and when you go to deep geographies where the literacy levels of the end customers are not very high, and they are valuable customers, in fact. So what happens over there is many a times agents tend to take their biometric authentication, complete a transaction, but in the last stage end up saying that the transaction didn't go through, and because of that the customer returns back, and but his account is already debited, the money has been withdrawn. So those kind of frauds happen very often, in fact, because if we study the entire chargeback requests and all which comes to banks, and many times these banks don't even know that they have a recourse. They can go back and claim that this transaction has not been done by me. They just get lost in the entire ocean, and not able to recover their monies, which has been taken away by these bad agents they set up. Other than that, if you talk about it, there are issues related to. I would not say that these are frauds, these are malpractices in terms of people who are dependent upon central government or state government for social subsidy disbursements and all. When it gets credited in their account, they run to the BC points to withdraw those monies, and many a times they are taking an off from their work, from their daily wage workers, moving going to these BC points. So agents in between sitting over there end up taking advantage of the situation, knowing that the person is going to lose his day's wage, so he's not going to come again and he'll need the money. So they end up surcharging him, charging him extra some 100 200 rupees to let him or her withdraw the monies. So these are the kind of practices which are very common in deep geographies when you talk about it.
Interesting. And I want to take a cue from, one of the viewers who made a comment that, it is not just the agents, but there are also fraudulent employees. And I came across something, a couple of days back. I was having a discussion with, an MFI founder. And then, I happened to come across this exact same point, wherein the employees are sometimes, also the problem. So in the VC industry, probably the last mile field agent who is there, and probably at the top level you don't even know what's going on the field.
No, I'll go one step further. Above people are talking about. In fact, someone in the audience did mention fraudulent employees. There are fraudulent companies. Forget about the employees. There are hell lot of companies which are operating, and if you look at it, there would be nothing less than I would say 600 to 800 odd incorporated companies who are acting as corporate VCs, and they are operating in that space specifically to game the system, to misuse the pipes, misuse the regulations, which have been, regulators have been pretty progressive, and they have relaxed quite a few guidelines to ensure that financial inclusion expands, and more and more people are brought into the financial inclusion space. But there are companies who are operating in this space in the gray areas. As Ashish was mentioning, transactions happen, but happen at the right at up to the threshold limits which are defined in the banks for monitoring purpose. So there are special players who are operating in this space.
Yes, who treat possibly, a DMT as a payout and, do all sorts of things. Well made points, Anuj and Ashish. And, we will move on to the next section of the panel discussion where we talk about, innovations in fintech. So let me start with you, Savitri. You are now co-founding Belong. You have earlier founded Goalwise. You have worked with NeoX. You have dealt with a lot of customers. You have worked a lot in fintech. Tell me, how can innovations in fintech contribute to reducing fraud while ensuring inclusivity in financial services? And probably, if you can, highlight some specific fintech solutions that have been particularly effective in this regard.
Yeah, sure. So, so it is a very tough balance, to be honest, financial inclusion and making sure that, through tech, we can innovate on stopping these frauds. But I think what UPI has done has been quite significant. Like what they did, once you have a core and you've made sure that the frauds are minimized, then you can start expanding, which is now UPI is doing through UPI circles and all of that, right? But it all takes time. Um, but initially, I think, some of the innovative things, now there are two ways where fraud can be stopped, right? One is account opening, like two stages. One is account opening, and then is the transactions themselves, once transactions start happening. So in that, some of the things that I found pretty innovative. One is during account opening, right? Telecom providers now provide data, like a mini KYC of the telephone number itself. Like how old is the telephone number? Who does it belong to? And this is through customer consent, like you can give an OTP. And then this can be fetched from the telecom companies. I found that pretty useful to see if there are these numbers that are just taken, through telecom companies without a history, and bank accounts are being opened on them. So that is one of those innovative solutions. The other is there are these tools called Sion, Sign 3 that fintechs use, which essentially what they do is if you put in a registered email ID, they scan all social media platforms and give you a social authenticity score for that person, right? So if I am creating an email ID just for the sake of creating this account, then it's not going to show up on multiple social media handles like LinkedIn or Instagram or Meta, right?
So,
So this is also a very good way to at least understand what that authenticity score is, and then a fintech or a bank can really make that decision that okay, beyond this score, below this score, we are not going to allow this person in. So these were some of the innovative solutions in account opening that we can do. Of course, there's SIM binding and device binding. Those are slightly older solutions, but very, very solid solutions to make sure that there aren't multiple accounts being opened through one device, right? So earlier it was SIM binding, then they figured out ways to get past that. Now there is device binding, which sometimes which again, like in families that are don't have mobile devices for multiple family members, it excludes them, but it is a robust way to make sure that frauds are lessened, right? Now when we come to transactions, some of the things that we've done in the past is actually just simple things like making locking channels easier, right? So in Neo, we had customers if you can lock channels easier, then obviously you're likely to do that more often. The other is to really send notifications to people when they're using apps. Like, let's say a lot of our customers used to go abroad and come back, right? And we knew they've come back because of the IP address, the geolocation. So we would always send them notifications saying, hey, why don't you lock your international channels now? So that also, so this is just one use case, but if you use the data to help people lock channels when they're not going to use it or things like that, that really goes a long way. And one of the things that we did in Neo, which really helped was, just blocking max stripes transactions and moto payments, right? That is another way of just making sure transactions are as less fraudulent as possible, like the potential for fraud is lesser. So yeah, these are some of the things, and of course RBI has now come up with different ways of doing 2FA, right? So we are definitely looking forward to implementing those, because now OTP has also become easy for fraudsters to sort of, through social engineering, take over. So we'll have to keep innovating based on these things.
Thank you, Savitri. Thank you so much. And especially, the social media tools, those I feel are very critical because it actually gives you the background and the history. And same is the case with the telco API. Those two are extremely relevant to the BC industry. Thanks for that. Jasmine, what are your thoughts on this subject? Innovations in fintech contributing to reducing fraud.
So I think while Savitri has covered most of it, I would add a few examples that I have experienced in my career. So, for example, while Savitri mentioned about Neo, let me give you a banker's perspective of what happened when Neo got launched, and it was a digital account. Now, this was the time when the industry was new to digital accounts, and while we used to have one or two fraud incidents in a normal branch, I think it skyrocketed when we started opening those digital accounts to having hundreds and thousands per day, per month kind of fraudulent transactions. Now, what was the nature of these transactions? The nature of this transaction was mostly an account which is opened in 5 minutes, which is something most of the digital accounts seem to offer. You can open your account in 5 minutes. Now, once the account is opened, the series of accounts that are opened by the fraudsters are used for money laundering and transferring money immediately from one account to another, so that to ensure that the source of money gets lost in the entire banking system. While this was not that easy in the physical frame of things, I think digital made it very, very easy. Now, what happened in such situation is every day the digital branch used to log in 100 FIRs because of the frauds that were happening. It also used to and had to report thousands of STRs, which are the suspicious transaction reports that you are supposed to report to the regulator. And this actually made us put a lot of restrictions on the way we were opening the accounts, and hence there were a lot of restrictions in terms of the number of transactions, or the amount of transaction that you can do in first 12 hours, first 24 hours, first 48 hours. Of course, SIM binding and device binding came later on because we were facing so many of these issues that we had to put in a mechanism so that we don't get the wrong customer in. And so we had the negative PIN code mapping, wherein we ensured that we do not open accounts from regions which we know are not going to be good for the system. So, geotagging, negative account PIN code mapping. I think we also implemented the scoring mechanism wherein we wanted that the right customer comes in through the right score, so that the alternate data of the customer was also checked in terms of where the customer is living, what is the activity that the customer is doing, and then we ensure that the customer comes into the system. Also, I still remember when I was a branch manager in HDFC Bank many moons ago, we used to get AML triggers. Now, these triggers wanted us to act on the customer, figure out what the customer is doing. Is the business aligned with the customer's activity, whatever profiling he has done, and then ensure that the customer is good enough for us to stay in the bank. Now, most of these were based on analytics and were mostly post-mortem because something that was found very suspicious, and then the physical network was going and doing the due diligence and then figuring out, okay, this is good to stay, this is not good to stay. When it comes to digital accounts, I think this system cannot work anymore because it would be too late. And hence, I think predictive analytics, artificial intelligence, and machine learning algorithms have come up to ensure that we are able to monitor these accounts on a real-time basis, because otherwise it is too late. And I think this real-time tracking of accounts has made it easier so that once a suspicious behavior of transaction in the account is observed, immediately an action of blocking or some action is being taken by the bank, and then the postmortem happens so that the fraud is prevented rather than analyzed later on once it's already happened. So I think even RBI has created a sandbox now to invite fintechs to co-create newer digital innovations in this space, which are related to either cybersecurity or which are related to improvising on the geotagging so that uh, the customers, ultimately the banking customers are taken care of. So I think a lot of new innovations are coming up. So yeah, and I think the BC industry, the microfinance industry, NBFC industry as well can benefit from it. And as you rightly mentioned, Vaibhav, yes, the frauds are not just customer frauds, but most of these frauds are employee frauds. And we have seen cases wherein most of the employees in a branch actually come together to create a fraud. So employee fraud are never a one-person fraud. They are frauds which employees come together and use the biometric, use the identity, do the identity thefts and ensure that, and these frauds are frauds that keep on going till the time, I think it takes 1 or 2 years for the system to even catch them. And hence they are done and delivered so well. So yes, I think the innovations that we see in the fintech space are bound to play some role in uh, preventing these kinds of frauds. Thank you.
Thank you, Jasmine. And I do agree that, mule accounts have been a worrying factor in the fintech space. And, fintechs have taken cognizance of that. They have been, innovating on the go. And that's how this industry has actually reached where it has reached. So kudos to all the, fintechs, including, the neos of the world who have gone ahead and, innovated this industry to the top. I'm sure that, Ashish, you would be facing a lot of this, at the bank as well, where, there are mule accounts which are getting created, and I am privy to a lot of innovations that you guys are also carrying out and doing to ensure that banking instrument does not just become an instrument from a mule account perspective. uh, let me come to you, Ashish and Anuj, and let's quickly talk about some of the technology solutions that can be implemented to identify and mitigate this frauds more effectively. Ashish.
Okay, so with the volume of data that we have and that we are processing on a daily basis because of the financial inclusion piece, be it through AEPS or DMT, it becomes very difficult to uh, actually do some good analytics on it. And this is where AI ML can come into the picture. So with both machine learning and using your bots, what you could do is that you can identify patterns within the data itself. Like I said earlier as well, is that the fraudster knows how to disguise his transactions with the normal genuine transactions. And our job is to identify such abnormal transactions which can eventually be claimed as a fraud. So we are currently in the process of implementing ML solutions where it identifies patterns through this voluminous data and tells us that if so and so pattern is observed, yes, this has a high probability of it being a fraud later on. Now, when I say it's a probability, see any new tech, any machine learning, be it a supervised machine learning model or be it an unsupervised learning model, it can always give you a probability. But that is a one step ahead. Right now, with the existing rule-based systems that we have, we are now moving ahead to a system where the models that we deploy, the algorithms that we deploy are now going to tell us uh, as to what could eventually lead to a fraud. I'm not ruling out the existing rule-based systems because without a rule-based system, your limit breaches and other things also will go for a toss. So it has to be a hybrid system between the rules and the AI and ML models that we deploy. At NSDL PV, we are in the midst of deploying one, and we will very soon see some results out of it. But yeah, in the meanwhile, analytics, post-mortem analytics is where we are. Like Dr. Jasmine said, uh, that may not be a good way of doing things, but as of now, that is how it is. And we eventually have to get into the preventive mode of things where during the flight of the transaction, during the transaction, while it is happening, we are able to restrict the transaction from happening. That is where we should be reaching with the use of AI and
Perfect, perfect. Anuj, let me come to you, and I'm going to maybe ask you a question based on because we are talking about the BC industry. Do you think that there are variations when it comes to various regions? Jasmine did speak about pin codes and blocking of pin codes and stuff, and I want to take a cue from what she said over there because I'm hoping that all of us, all the viewers, have seen Jamtara series,
Yeah.
and yeah, and it has kind of established the norms of the baseline frauds that happen. So, do you see any regional variations, Anuj, when it comes to that? Do you think there are factors or evidence from the field which make certain region more susceptible to financial frauds?
There is definitely a pattern. There is a trend which we keep observing in terms of and the clear factor over there is to look at AEPS chargeback cases, which comes to us, and when we start to do analysis over there, there are various pockets within states and on a pan India basis, which we do red flag as a practice at Hitachi Payments. Also, our compliance processes might be slightly more stringent than a full-blown bank. So what we do is that we have a negative pin code directory at our end as well. And any person within a DIY journey who wants to go ahead and engage with us, or even through our employees as well, any agent cannot be onboarded until and unless we have presence in that location and it is a non-negative list location. So there are trends. You talk about Bihar, you talk about UP. Every state, in fact, has specific pockets where people have developed traits, I would say, skill sets to game the system and make quick bucks. So that is something which we keep monitoring on a daily basis. In fact, it's a daily chore for us, and we also get a lot of feedbacks from NPCI on a monthly basis as well. So what Ashish was pointing out, that there's no common sharing of information and repository of bad actors, so that we can take care of, or ensure that we are not onboarding them in the system again if they have been barred by one bank or the other. So that, at least on APS front, a negative database has got created, in fact, and that is something which is shared, including fraudulent devices also, which have been used in last transactions to commit frauds. That is also something which is happening. Second thing, what you pointed out and you were talking about in terms of usage of digital modes and medium and their impact on the frauds per se. Uh, when I not long back, but when I go back 12 months and look at the number of frauds which were happening in the BC space, specifically. And when you talk about BC space, you have some 4 or 5 sets of services which are rendered through them. One is on the asset side, which is pretty safe because it's not at that scale. But the moment you talk about transaction banking, the moment you talk about money transfer, remittances, cash withdrawals, and all, that is at very huge, huge levels. That is where the maximum number of frauds which happen. DMT is one animal which is more of money laundering related stuff, because a person is paying cash at a counter and then you are remitting it somewhere. Mostly the fraud happens when a person is trying to withdraw from his own account, where his account credentials are compromised. Account takeovers happens at times. Uh, I would not name the institution, but no, we had instances where people were buying SIM, but their account was being opened in parallel as well. And that particular bank was summoned and reprimanded by RBI as well with strict actions. So you can just understand that millions and millions of accounts were getting opened without the knowledge of the people that their account is being opened. Now, if those accounts are opened not in millions, but even if in hundreds and thousands in the space, and that account is taken over by someone else and misused for any purposes, not only for the remittances or money laundering, but in terms of social subsidy disbursements coming in those accounts, getting siphoned off, all those things happen. So there were some preventive measures which RBI and NPCI took over. In fact, in a year back, they introduced a simple thing of two-factor authentication by the agents. So any BC agent sitting in the last mile had to go ahead and put his own biometric in the device to start the day. That itself reduced the number of frauds to a great extent. Reason being that earlier what was happening was there was a person who was signing up as a business correspondent in case he was getting blacklisted by some bank or the other. So he used to go ahead and sign up in his wife's name in the second instance and game the system. The BC agency was coming to that particular person. And then there was a third person who was sitting actually and performing transactions on ground. So the moment this biometric thing came in fact, lot many people who were conveniently working with in the names of relatives or wife or spouse or others, they got weeded out of the system. So that reduced the fraud big time. And if I look at the last month data itself, APS frauds, which was 10 times more than a year back, was approximately some 800 odd transactions which have got reported last month. Hardly 5-6 million INR. That is some 55-60 lakh rupees of frauds which have happened in the entire month of October. So that is a major shift which has happened. And thanks to this digital public infrastructure which we keep talking about, in fact, people are leveraging that to the core. The most recent announcement by RBI, which came into effect from 1st of this month, with respect to doing KYC of DMT customers, that is going to have a far-reaching, impact. And thanks to that particular guideline, I am looking at a lot of cleanup happening in the industry. So those bad actors and bad companies, which I keep talking about, a lot of them are going to go out of business because of banks going ahead and introducing Aadhaar-based eKYC for a DMT customer also. So that will many will go out of their business because what they were doing earlier with mobile numbers, they will not be able to do with the new implementations which have been mandated by Reserve Bank. And I can relate to what Jasmine also said with respect to the HDFC Bank days and monitoring of account, I can relate to it. I was at Citibank, and we used to have a system called Mantas, where we have to go back and there were triggers and trend alerts which were thrown by the system, and you have to actually go back and sign off with actual information after having a discussion with the customers if the overall transactions were not in line with the profile of the customer or in past trends. It used to throw out anomalies over there.
Yes. Also, Anuj, what mostly we used to observe is that many a times it's not that the customer's business was wrong, it's the profiling of the customer at the time of opening the account was itself not right.
Correct.
And many a times the triggers used to be false triggers. And hence, when the right trigger also came in, we used to take it with the same seriousness the way we used to take all the triggers. So I think it had its own drawbacks. And to add to the regional differences question, Vaibhav, uh, I have observed that certain pockets, as Anuj, you rightly mentioned, Bihar and certain East UP pockets are more prone to frauds as compared to, say, a Gujarat, or a Hyderabad is more prone to frauds as compared to a Tamil Nadu. And the reason is very simple. It's um, one is the socio-economic condition of the customers there. Also, the literacy level. I think literacy level plays a very important role because the financial literacy of these customers, a Bihar customer as compared to a Gujarat customer, there's a big difference in terms of literacy. And hence, I think most of these frauds happen in Bihar. In fact, there are business models, fintech business models that have emerged also because people know now, based on data, that the levels of education in Bihar and East UP is so low that such a business of offering consumer products or offering mobile phones at 0% loan will work in a market like Bihar, but will never work in a market like Gujarat. The only reason being Gujarat is a very well educated market. It may not work in Tamil Nadu because Tamil Nadu is a very well educated market. So I think customer education somehow plays a very, very important role in fraud management, fraud prevention, risk management that we talk of. Yeah.
Thank you there, Anuj. Thank you there, Jasmine. So down to my last two questions now before I open the panel to the viewers for questions. And Jasmine, let me stick with you. So, what long-term effects you think can fraud have on financial inclusion? So, whatever efforts that the financial institutions are putting in, do you think that fraud actually goes a long way to dent those efforts? What are your thoughts on that? What are the long-term effects on those?
So if you look at the financial inclusion scenario in the country in last 2 decades, I think we've come a very long way. And the entire JAM framework has changed the way financial inclusion, as per the World Bank's Global Findex report, stands for at 80%, and as per RBI index, what it stands for. But forgetting those numbers, index, and statistics, I think uh, financial inclusion is not just about opening a bank account. It is much more beyond that. And to achieve financial inclusion in its letter and spirit, it needs to be a 360-degree financial inclusion, which includes easy access to not just an account, but also credit, also insurance, also investments, and the right way in which the beneficiary can take advantage of it. So, frauds, I think, while digital interventions through the JAM framework has uh, created a number or scale effect in the financial inclusion space, frauds can definitely uh, uh, play a negative role in terms of ensuring that the financial inclusion, as envisaged by RBI in its letter and spirit, happens the right way. And I think uh, it's very important that to achieve the financial inclusion, fraud management becomes a priority. And hence the digital innovations that we are talking of in terms of fraud management also needs to be adopted by even the incumbents like the PSU banks or the microfinance companies or the NBFCs. Like, for example, what Ashish mentioned, they are still at the analytics way of managing frauds that HDFC Bank also used to be 20 years back. So I think even the incumbents needs to start using these digital innovations to be up the curve to ensure that financial inclusion is achieved in the right spirit. And for example, if I have to give you an example of credit per se, uh, there have the microfinance industry today is struggling, and the only reason why it is struggling is because one customer has taken 10 loans, 12 loans. Now this is a systemic fraud, right? Because it has gone unchecked. And there is no way, if a company, an NBFC or a bank, was giving credit based on the alternate credit data that they seem to be saying that they are using, or if they were giving credit based even on the CIBIL score, there is no way such a situation could have come up. But this is what the industry is struggling with.
I agree with you there. I think civil kind of this thing is required in MFI. And once again, coming back to my previous point, maybe when a SRO gets set in, those will get addressed. Now, guys, I'm going to ask you to keep your answers very crisp and maybe and under 2 minutes, because I want to open this panel to audience. Savitri, your views on the same point I raised to Jasmine.
I think, I mean, honestly, I know people who have been defrauded. It's become so rampant. It's really not about educated or uneducated. I know some of my closest friends have been uh, defrauded in the recent past, right? Because there's a lot of sophistication. There are APKs that can be downloaded and an app actually that just mocks a real app, right? So what ends up happening is basically they stop trusting themselves and the financial system. And a lot of them then really stick to people they physically know and therefore have suboptimal rates of loan or suboptimal results on their personal finance management. I think that is one of the biggest first order problems, them really not trusting themselves anymore and the system by and large, because also trying to get back this money is practically impossible. One of my closest friends has gone through that entire process, and it's absolutely a nightmare, from the police to the banks, and it's as good as gone. So I think that is the biggest long term impact I see there.
Thank you, Savitri. Ashish, what role does regulations and framework play in addressing financial frauds in the digital economy?
It plays a very big role because as a bank, I would be having a very very, uh, you could say, horses blinds kind of a view, looking at only my customers, not having a view of how the other bank customers or how the ecosystem is working as a whole. And that is where the regulator itself plays a big role, wherein getting information, collating information from across different banks, different fintech players, sharing that information in a much agreeable and doable kind of actionable, that plays a very big role. I foresee NPCI, RBI, all of them have been doing their own bit, but these small things that they have initiated will eventually help us in ensuring that we curb frauds in the BC industry.
Thank you, Ashish. Anuj, any last thoughts?
See, the these frauds and other things, which keeps happening in the industry, I'll not restrict it to BC industry per se, but I will say entire fintech and startup space. Uh, See, this is bound to happen, in fact, because in every setup, every ecosystem, there are always some people who are bad actors, as we call them, be it in the traditional way of lending and banking services. There was fraud in a different manner, which was happening at that point of time. Now we have shifted towards digital. So the modus operandi has changed. But if you look at it, no, there will always, it's a continuous learning process. You will come up with some guidelines, will come up with some processes that will be introduced either on your own or by enforced by the regulators. You will adopt to it. Over a period of time, people will find ways and means to go ahead and game it or circumvent those guidelines, or still go ahead and game the system. You will learn again, you will implement. So it's a continuous process. You cannot run away from it, but definitely with the help of the infrastructure and the innovation which is happening in the industry, we've already seen what Aadhaar has been able to do in the last 7-8 years in terms of financial inclusion side. Same thing is being implemented to curb financial frauds to an extent, specifically to gullible, illiterate customers who are the biggest target. Other than that, even when I look at the FRM systems being built, based on AI and machine learning, today the beauty is that we may have some amount of inconvenience which is caused to the customer. We may not be able to offer them the most privileged VIP treatment, but we are dealing with masses when we talk about financial inclusion. And even if it is slight amount of friction which comes in terms of servicing them, it is still worth it because it's better safe than sorry. So today, when you look at the EFRM, which has been introduced by NPCI, wherein on a real-time basis they go ahead and do a risk scoring, and they approve or decline a transaction based on the transaction pattern of that VC agent, or probably based on the transaction pattern of the account holder. It has resulted in reduction of frauds by a factor of 10. So that is huge. It leads to a slightly higher, transaction decline ratio, because many a time a transaction is declined even if it is genuine. But still, that has helped a lot in curbing the frauds. Likewise, there will be innovations and other developments which will keep happening in each and every product or services we are engaged with in the industry. It's a continuous learning process, I would say so.
Thank you so much, Anuj. And thank you everyone for this wonderful panel discussion on financial fraud in the BC industry. The BC industry has innovated in the past, continues to innovate today, and I'm sure will continue innovating in the future as well. As fraudsters continue to bring in innovations, innovative methods of doing frauds, the industry will continue to create more innovations to plug those frauds and move forward. Uh, though a question always stays in my mind, that when we talk about the BC industry or the banking correspondent industry, it is something that is required in India because it's done in an assisted model. The question that always stays in my mind is, at what point in time does that actually move to a self-service model? Eventually, maybe in the next 5, 7, 10 years. But a topic for a discussion for a different day. And Dr. Suparna, I think I'm now going to open the panel for questions. So over to you, Dr. Suparna. And thank you, everyone.
Yes. Yes. Thank you, everyone. This was a very insightful discussion. I have already mentioned in the chat box for the people to mention their questions, because some of these could be taken now and answered by the experts, and some of these will have to be discussed online or send the answers offline. So I have also mentioned my email address in the chat box. So anybody who wants to later send any question are most welcome. So over to all the attendees to ask insightful questions, and let's get some insightful responses from the panel.
So I'm sorry, just before that, can the panelists please look at the cameras for a photo? All right, so when you're ready, 3, 2, 1, and cheese. Thank you.
Okay, so now over to the attendees for the question answer session, very quickly, because I think we have overshot the time. I think we already have a question in the chat box. The question is, isn't money laundering a business model now for last mile VCs from products like DMT and cash management services? If regulatory is coming hard, what next for them?
So that's a favorite topic for me. In fact, I've been sitting on both sides, at the bank's end as well, on the fintech side. See, definitely, DMT as a product has been used uh, in the industry. I would not say by a significant portion, but at least I would say 10 to 15% of the overall flows are not clean flows in the industry. So it's a very welcome move. In fact, it causes a lot of friction when you talk about. If I'm sitting as a business head and I deal with my sales guys, they come crying to me saying that, sir, early the transaction used to happen in 2 clicks, 3 clicks. Now it has become very cumbersome and complicated. It is too much of friction for a customer or for a last mile agent sitting over there, performing transactions. But still,
Day going on, so it's all right.
I am very, very, very happy that RBI has taken cognizance of that, and they have introduced some checks with respect to introducing this biometric KYC kind of solution in the entire process. So I expect that almost 50 to 60% of the people who were operating in this space, specifically with a mindset to go ahead and abuse the system, they would be having a tough time in terms of uh, able to continue, and at the same time there will be lot many non-serious players from the VC industry who will get weeded out. That is what I look forward.
Thank you, Anuj. That was a great answer to the question, and also thank you for the question. I think we have one more question coming from Rahul, who is the director for the innovations project in Grameen.
I'll take that question. What role can AI play in real-time monitoring and identification of fraudulent transactions? AI can play a very big role in the real-time monitoring of fraudulent transactions, wherein during the transaction itself, it can help us identify, using various algorithms, various statistical models, it can help us identify what is the probability of the transaction eventually being classified as a fraud. Now, that gives an impetus, that gives a priority listing for the analyst sitting in front of the FRM solution and the case manager as to which cases they have to attend to in order to ensure that they are able to take a that will actually lead to a fraud. Now there are two aspects to it. We can ask the AI itself to take the final call of allowing or disallowing the transaction to move forward, or we could also ask the can take a call basis his or her investigation of the transaction. AI hence will become like a support system for the fraud analyst teams across banks and fintechs to ensure that we are able to catch and eliminate maximum of the fraudulent transactions which are being pushed through the system.
Yeah, I think here I want to, add the way we also end up using AI is, a lot of pattern identification, and then making sure that if that pattern is being matched to stop. So a lot of things like Ashish was also mentioning, there are a lot of smaller transactions and then bigger transactions happen in these mule accounts, fraudulent accounts. So when this pattern gets matched, you kind of stop or freeze the account and then have a process for opening these accounts. So various pattern identification is where AI has been super useful in making decisions on our behalf. Also, if a card or something is being used in through multiple IPs, then that also gets blocked with AI's help.
Thank you so much for the answers. We will take one last question in the interest of time, and this comes from Seema, representing FIA Global. And actually, for once, this is a question for Grameen Foundation. So I will request Mr. Rahul Dubey to answer that question. So Seema's question is: there has been no revision in commission for more than a decade now in either BC's, DMT, or APS business models, not even in line with inflation. Unless this is addressed, frauds, especially small ticket ones, will continue to rise. Will Grameen Foundation play a role in advocacy here? Wow, Rahul, good question. Rahul.
Uh, yeah, hi. Thanks for reminding me. Uh, yes, Seema, this is an area that we have not actually gone into, like the advocacy part of it, yes. But the idea behind creating the community of practices that, when we have these kind of issues which are there, and I understand that the commissions part is a major concern area, and that actually leads to a lot of frauds which are happening. So we do plan to take it up at the different forums. We have BCFI as a partner for us, so we will be utilizing that channel to to take this up with the relevant authorities on this. Uh, and also here, I would also like to thank Savitri and Ashish for their inputs on the question that I asked, because I was recently at the one of the events, and in Malaysia, they've deployed this technology, something based on AI, where they're able to in real time identify all money laundering which is happening. And this is my question actually came from there. So thank you, Ashish. Thank you, Savitri, for your reply on this. And it's a very good, it's a very gray area, and we definitely need to work on that. Right. Yeah. Thank you.
So I know I said that this will. So I know. I'm sorry for the echo. So I know I said that this will be the last question, but we have one question which comes from Pankaj Srivastava. He is a very senior project manager with Grameen Foundation, and his question for the panel is: digital arrest is another kind of frauds emerging nowadays. What precautions we should take as a customer? And I know from why Pankaj is asking this question specifically, because his job is to meet a lot of BC agents and also do a lot of customer survey where questions like this, like, what are the various precautions being taken? My data might not, will my data get stolen? Will my data get breached? These are the questions a project manager or the managers or the field staff face day in and day out. So yes, I'm very interested to know what the panel thinks that should be. The digital arrest is another kind of frauds emerging. What precautions we should take as a customer? So yes, thank you. Anybody in the panel?
Yeah, I think the Prime Minister of India in his Mann Ki Baat has given us a lot of ways in which we can actually, protect ourselves from these kind of frauds. And I think it starts with awareness of what it takes, what is the pattern of these kinds of frauds. And when you receive these kinds of numbers, you need to immediately block. Now, these can be this can be various kinds of scenarios. For example, even yesterday, I received a call wherein it said Customs Department has actually seized your courier, and you have to come, you have to share your documents, you have to ensure that something which is not right has come to the Customs Department. So you will have to, you are under digital arrest and you have to provide so and so and so these things. Now, it's important to know not to click a one or a two and immediately block that number. And I think a lot of these scenarios have been now circulated via newspaper, via social media, via the government channels as well, wherein such examples of digital frauds that have happened. In fact, one of my female colleagues, a very senior pharmaceutical lady, she was into digital arrest for 36 hours and she lost 60 lakhs of rupees. And the only reason that she had to give was she was not aware that something like this did not exist. So I think now there is so much of awareness. It's all about the buyer beware and ensure that you need not fall for these kinds of frauds, because there is nothing like digital arrest in India.
Yeah, yeah. I think just to add to what Jasmine was saying, I think one of the things that you can really use is reading the URL very, very carefully. Usually they send like an SMS, like India Post will come with a double T. So, just reading URLs very, very carefully where they direct you, and honestly not picking up calls from numbers you don't know. If it's a bank, they will figure out a way to reach you. So I think the blanket rule that I nowadays follow and tell people around me is just don't pick up unknown numbers. If it's a genuine bank, trust me, somebody will figure out a very good way to get in touch with you if it's important. And if it's not, then it's fine if you're missing out on something. So I think these are the two things that I use.
Thank you. Thank you so much. Thank you so much, Savitri. Thank you, Pankaj, for an insightful question. So now you know when you face these questions on the field, you know how to answer these questions from the customers. Well, I would personally like to ask many questions, and I know attendees who are attending today, they are all from the BC industry or from banking sector or from regulators, and they also would have some questions. So as I have requested already in the chat box, kindly email those questions to us, and we will forward those questions to our esteemed panelists, and we will have answers, their responses and their answers, and we will like to forward them. But to forward, I would like to have the email addresses of the attendees. So back to you for the future events, conferences, webinars that we are planning to have. Before we part, I would just like to add that this webinar is a part of webinar series which are being organized by the Grameen facilitated community of practice, which is a knowledge exchange platform and a community. Our previous webinars have focused on various gender issues in the BC industry, regulation issues, about the future ready finance, about the future of finance, etc. And today's edition will be a very valuable addition to today's webinar, will be a very, very valuable addition to that series of webinars. With that, I will request Rahul to give the vote of thanks, and over to Rahul. Thank you again, everybody.
Thank you, Dr. Sperna. Would like to thank the panel of Dr. Jasmine, Anuj, Ashi, Savitri, and specifically Weber for an insightful session that we've had today. There's been a lot of takeaways from this, and we look forward to having your support for all our future webinars. Thank you once again for all the attendings, and we would love the platform to grow. And this is just the beginning of the series of webinars, like Dr. Sparna said. And I would love to see more attendees on our future platform, future webinars. Thank you, and thanks a lot once again. Have a good day.
Thank you.
Thank you.
Thank you, everyone.